Preliminary read on April durable goods, down 2.1%. Not good, but pretty close to expectations. We have a revision, 2.6 last look. It's downgraded to 1.7. Ex-transportation unchanged, also close to expectations. Last look, lost 0.8 from up 3 to down 0.5%. Capital goods orders, non-defense ex-aircraft, proxy for capital spending, down 0.9. That's about triple what we were expecting. We were expecting down 0.3. Also a retrograde there from 1.4 to only 0.3. And if you look at shipments versus orders, that was unchanged. Also close to expectations, and a downward revision there as well from unchanged to down 0.6. So these are preliminary. They can fluctuate, but really nothing good here, nothing horrible, nothing good. We see interest rates still continue to hover at lower bounds. The long end violated some important support levels. 239 is where we closed tens last week. We're 231 now. We had 229 yesterday, hovering Halloween 2017 levels. Becky, back to you.
Stay here. Let's bring in Steve Liesman. He joins us with more on this. And Steve, what's your reaction to that?
Well, I'm going to give you the easy part. The easy part was the decline in Boeing orders. Expected.
Okay, right.
Okay, this is the max coming through. And by the way, I don't know how much we want to X this out, right? Because there's obviously going to be a real economic impact. Usually you have this volatility in aircraft orders, and we exit out and it comes back another month. Now there may be a sort of more enduring. How enduring is a Phil LeBeau story? We'll have to follow him on that. But down 25% on non-defense aircraft parts. Rick is 100% correct that this is one of the most volatile series we have. And I did some work on this. You don't know if you're on which side of the zero line you're ever going to be on this number. That said, we watch it very carefully. And the non-defense capital goods ex-aircraft being down 0.9 is worse than expected. It was up 0.3 the 2 prior months, so that's okay. And as you know, Becky, we've had a running conversation about what's happening in the wake of the tax cuts to equipment spending and business investment, okay? So I brought you 2 reads. It doesn't include today's data, but it's a longer-term look at the quarterly data. 2 reads on business investment. There's 2 different channels we're looking at. Equipment, which is weird. It's been sort of the growth rate has been down since the tax cuts were implemented. And then there's intellectual property, which, hats off to Barry Knapp on this, who's really pointed me to look at this as the way the tax cuts might be having the biggest effect is intellectual property, software, and things like that. Some of that could be repatriation of the licenses for intellectual property here in the States, but it's done relatively well. So we keep watching this, keep looking for the impact. And now we have to start looking for a potential impact on business investment from the tariffs. And that's one of the channels that we talked about in the last hour that economists expect to see it.